Credible Crypto, a respected on-chain analyst whose calls have often landed, has flagged a higher low structure and a decisive flip of the $3.10 area from resistance into support. And from that simple technical fact, he's built a roadmap that points toward fresh highs, with an intermediate target near $3.90 and the psychological possibility of a new all-time high if the market cooperates. That claim deserves respect because it's anchored in clear, testable conditions. But it also requires rigorous pushback, because markets are probabilistic machines and the same chart patterns that signal breakouts can be invalidated quickly by macro shocks, liquidity shifts, or profit-taking. Start with the core bullish mechanics Credible is relying on, a higher low. Break-hand retest of $3.10 is textbook trend confirmation structure. In plain terms, once an old resistance becomes new support and price reliably holds above it, participants who miss the initial move often view that retest as a lower-risk entry. That behavior attracts both momentum players and longer-term allocators who prefer confirming price action rather than chasing wicks. Couple that with the fact that XRP in the last cycle benefited from a multi-factor regime, legal clarity in certain jurisdictions, relistings, institutional curiosity around tokenization and ETF speculation, and you get a credible narrative for why XRP can re-rate faster than some other altcoins. The market's discount for regulatory uncertainty or listing friction has partially compressed. That compression can lead to outsized percentage moves when combined with technical confirmation. Credible's additional comparison between XRP and ETH, the argument that XRP might outperform ETH on a relative basis in the near term, is not merely provocative, it's rooted in relative strength dynamics. If ETH is already re-rated substantially, and some allocators are seeking higher beta plays within the altcoin cohort, XRP with its recent structural breakout can attract that rotated capital, especially if XRP ETH shows improving momentum. Historically, markets do rotate once leaders run. The next phase often favors names that have compaction patterns and a visible path to a breakout, which describes XRP now if $3.10 holds. Add the behavioral element, a confident analyst voice. Like Credible, publicly publishing a chart target tends to magnify flows because many traders treat such posts as a signal to allocate, and the mechanical potential for a self-reinforcing move is real. But the bull's checklist must be tested against hard reality for $3.90 or a new ATH to become probable. 3 measurable conditions must hold simultaneously and sustainably. First, XRP must hold $3.10 as a floor across multiple timeframes. Intraday noise shouldn't be allowed to invalidate the level. Second, liquidity metrics must support upside, meaning exchange reserves should be stable or falling, indicating accumulation, rather than disposal and order book depth at progressively. Higher levels must not be painfully thin. Third, macro and market-wide risk appetite must remain constructive so that rotational flows into altcoins continue rather than reverse into safe havens. If those boxes are ticked, a run to $3.90 is a reasonable scenario to trade toward. If they are not, the roadmap collapses quickly. Now let's map the key risks and failure modes in crisp terms, so you can see the other side of the trade clearly. The most immediate and quantifiable risk is market leadership and correlation. Bitcoin still leads market regime changes in many cycles. If BTC fails to hold its own critical supports or experiences a rapid deleveraging event, XRP's technical strengths can be swept away in a broad risk-off flush. Credible himself acknowledges the interplay with Bitcoin, noting the necessity of BTC holding its support zones for the broader risk-on thesis to persist. That's not hand-waving, it's an operational trigger. Watch BTC's ability to hold its own structural levels, because if BTC rolls over, altcoin rallies often fail first and hardest. Second, liquidity concentration and derivatives positioning create mechanical vulnerabilities. If open interest in XRP futures is high, and a large portion of the market is levered to the long side, a modest retail panic or macro headline can cascade into liquidations that slice through the $3.10 area. Likewise, if a meaningful chunk of supply is held by a small set of addresses that decide to distribute into rallies, the apparent support can quickly become a false floor. These supply concentration risks are common in token markets, and they make seemingly robust technical setups fragile. Third, the expectation versus execution gap on institutional flows and productization is a timing risk. Headlines about ETF probability, custody readiness, or corporate interest can move price ahead of actual capital flows.
Nice.
Pricing in institutional allocation that then gets postponed or fails to materialize, prices can correct sharply once speculative positions are unwound. Fourth, while a retest and hold above $3.10 is bullish, markets are not obligated to deliver a measured ascent to $3.90. They can gap, spike, and retrace, and such violent behavior punishes traders without disciplined stops. In summary, the failure modes are cross-asset contagion, BTC-led, derivatives deleveraging, concentrated supply distribution, and headline-driven reversals. So, how should a rational trader or investor operationalize this thesis while respecting both the upside and downside? Think in scenarios and milestone-based sizing rather than binary all-in conviction. Scenario: a validated breakout unfolds if XRP consistently closes above $3.10 on higher than average volume across multiple daily candles, exchange reserves continue to fall, and BTC remains constructive. In this case, an attacker might scale into a position with clear target bands, first target near $3.902-4.00 as credible suggests. Further targets if positive momentum and on-chain metrics confirm. Risk management. Ladder entries, partial. Profit taking at intermediate resistances and trailing stops under progressively higher swing lows. Scenario B: false breakout happens if $3.10 is held intraday but fails on a daily close, or if large wallets deposit to exchanges en masse. Here the prudent action is to either avoid new longs or to hedge existing exposure because the probability of a retest of lower support increases. Scenario C: macro shock occurs when BTC breaks key supports or a systemic shock hits. Markets, all altcoin positioning should be reduced or hedged, since cross-asset liquidations become the dominant force. The operational playbook also benefits from monitoring a short list of high-signal indicators, exchange inflows, outflows, net exchange balance, derivatives, open interest, and funding rates to sense crowdedness. On-chain activity metrics that reflect demand, active wallets, large transfers, and stable custody movement. And macro indicators that affect risk appetite, real yields, CPI data, FOMC commentary, practically. Traders can use these signals as a dynamic checklist. If exchange balances fall and open interest rises modestly while funding remains healthy, the breakout gains conviction. If exchange inflows spike or funding blows out negative, 4 longs. Risk off. It's worth addressing the relative performance claim. XRP outperforming ETH because that frames how capital might rotate. ETH's strong recent performance creates a two-way dynamic. On one hand, ETH's leadership can sustain a broad altcoin bid as rotation flows trickle down. On the other hand, ETH's outperformance reduces the marginal appeal of ETH's alternatives, unless those alternatives show superior risk, reward, or relative strength setups. XRP's edge here would be structural. If XRP's technical breakout occurs when ETH is near resistance or consolidating, momentum-chasing allocators may rotate into XRP for higher beta. Conversely, if ETH reaccelerates, liquidity may prefer ETH and leave less for XRP. Thus, watching the XRP ETH cross, not just absolute price, provides a clear barometer of relative rotational strength. If XRP ETH holds above recent highs and trend lines, the multi-asset allocation thesis favors XRP leadership. If it fails, the rotation narrative is weaker. Now address the behavioral and narrative mechanics because markets are social systems. A credible analyst publicly calling a target can create reflex flows that accelerate price temporarily retail and algorithmic funds. React quickly to influential posts, but this reflexivity can also create crowded trades that revert once the narrative exhausts. Be particularly mindful of the distribution into hype. Dynamic. Early buyers who accumulated pre-breakout may be motivated to distribute into the first leg up, and if new buyers are primarily shorter time horizon speculators, the risk of a swift reversal increases. That's why longer-term holders need conviction beyond technical's institutional deployment. Custody commitments or clear increases in real-world use cases that expand demand beyond speculative flows. Finally, consider time horizon and position. Sizing. If you're a swing trader, consider weighting the thesis by evidence. An initial position on confirmed daily closes above $3.10. Then add on confirmation exchange outflows, supportive BTC, rising on-chain demand. Use protective stops, size to your risk tolerance. Don't let a single position threaten your account's viability. If you're an investor with a multi-month view, stagger entries and treat any sharp pullbacks as opportunities to average in, but maintain a disciplined stop-loss framework and a view on allocation size relative to portfolio risk.